me, stablecoin infrastructure is powerful because it drives towards what we call a tokenized or on-chain economy. Today, it's money movement, it's payments that's on-chain, but we imagine a world in which FX, bonds, equities, real estate, all value in the financial system will go on-chain. We would be able to drive liquidity across 8 billion people all over the world in all of the different markets and be able to create new financial services that ultimately cannot be created because of the infrastructure today. And that's where I think stablecoin infrastructure is driving to, and that's ultimately where the value will accrue.
Happy New Year, everyone, and welcome to the first FinTech one-on-one podcast for 2026. This is the show for FinTech enthusiasts looking to better understand the leaders shaping FinTech and banking today. My name is Peter Rented, and since 2013, I've been conducting in-depth interviews with FinTech founders and banking executives. Today, I'm delighted to welcome to the show Daren Guo, co-founder of Reap, a Hong Kong-based financial infrastructure company that's building the new financial rails based on stablecoins. The company has become the world's largest stablecoin card infrastructure provider, processing over $6 billion annually while serving neobanks, centralized exchanges, and traditional financial institutions around the world. In our conversation, Daren explains why he left Stripe, where he was employee number 90, to build on what he saw as better infrastructure for global payments. Also, how stablecoins are driving toward a tokenized economy where all value moves on-chain, and why cards are just the starting point for a much broader vision. We also discuss Reap's recent MPI license in Singapore, their expansion plans into the US market, and how they're building new products ranging from embedded payments to payroll streaming that simply have not been possible with legacy rails. Now let's get on with the show. Welcome to the podcast, Daren.
Thank you for having me, Peter.
My pleasure. So let's kick it off by giving listeners a little bit of background about yourself. Talk about where you grew up, where you went to school, where you are now, and some of the highlights of your career to date.
Good to meet you, everyone. I'm Daren and co-founder and CEO of Reap. I've come from a very dynamic background when it comes to the different geographies that I've been a part of. I was born in mainland China, but immigrated to Canada when I was very young. So grew up mostly in Toronto, Canada, which is also coincidentally where I met my co-founder, Kevin. We've been best friends since we were 11 years old. Same middle school, same high school. Very close to going to the same university, but I think he was a little bit smarter than me, so went to a better university than I did. But our path converged again after university. We became roommates. And that was also where I, worked with him indirectly as part of my first startup, where I helped move data from different payment gateways into accounting software. And that was my first foray into tech, into startup life. Loved the experience, but had a lot of different challenges that as my roommate, he was my board observer, therapist in a lot of different ways. And obviously saw the struggle that I went through. And then ultimately for the second time around, decided to obviously actively participate. But through that experience, I was able to interact with Stripe and then ultimately sort of brought my career to San Francisco. I was the first member of Stripe's growth team, joined when they had less than 100 people, and spent most of my career there actually building out their presence in Asia. So set up a lot of their initial infrastructure across Southeast Asia via Singapore, but also covered China, Hong Kong. And obviously, a phenomenal experience seeing that growth, especially through the lens of emerging markets. And that formed a lot of my thesis and I would say building blocks and foundation for how we think about building here at Reap, especially nowadays where obviously stablecoins and modern financial infrastructure has quickly become top of mind and mainstream for a lot of different players all over the world.
So did you do that from San Francisco or did you move to Asia?
So I started in San Francisco, spent a couple of the years there from around 2013 to 2015, and then moved to Singapore to kick off their expansion. And I was one of the first people on the ground there to do that.
Okay, interesting. So with the time that you spent at Stripe, what made you decide to leave such a dynamic company to start again, to start your own startup?
Yeah. So I joined Stripe when they had a very interesting relationship with crypto and sort of the more modern stack of payments, right? For a long time, they were very first movers and arguably too early in the Bitcoin payment space. And ultimately that led to the deprecation of supporting Bitcoin in 2016. I think strategically, they also wanted to build out something called the Global Payments and Treasury Network, which essentially encapsulates what stablecoin infrastructure for cross-border payments is doing today, where it's global money movement, programmable in nature. But again, they were a little early, and that thesis of being able to move value and money cross-border in a seamless way ultimately did not have the infrastructure to be able to support that. And at the same time, we were trying to expand into emerging markets, Asia, which is very different than expanding into the US, Canada, or developed markets in Europe. So I think because of the infrastructure that we were limited to, international expansion was also quite difficult in Southeast Asia. So because of all of those things, I felt like the impact of really creating more of a global infrastructure, upgrading, the financial systems for developed markets was not something that I felt like had the necessary speed or velocity behind that to build the momentum necessary. And that's ultimately, why I left to start Reap, to be able to target and be able to build off of a better infrastructure that's a lot more conducive to global payment use cases. And that's where we get very excited about the development of stablecoins as it relates to, upgrading and enhancing the financial systems for emerging markets for cross-border payments, especially in the global south.
So what was your initial product vision then? Because this was a few years ago, right? It was 2018 that you left Stripe, and stable coins were barely getting going right then. So what was the initial product vision?
It was definitely very early days, and people assume that I was an early crypto and stablecoin believer, and that could not be further from the truth. And I'll be the first one to say that I was a skeptic in a lot of different ways. And we started in Asia, and folks have to remember that some of the largest exchanges in the world, the FTXs of the world, started here in Hong Kong. So there's a lot of residual talent, capital, but also a lot of distractions. But we were almost always very focused on the utilities of payments. And it wasn't really until 2021 or so where stablecoin proliferation transcended from purely as an on-ramp to do crypto and trading and speculation to becoming more of the modern financial money movement stack that people realize it is today. But we've always been very focused on the utility aspect of stablecoins, and hence we started very much early in the sort of stablecoin card space, stablecoin payment space, and that ultimately allowed us to be able to build the infrastructure necessary, the ecosystem partners necessary to be able to become the largest stablecoin card infrastructure player in the world today. But it wasn't until stablecoins became this utility layer for payments that we ultimately sort of saw this sort of growth trajectory and inflection point for the business.
Right. Yeah. So you were early as well. It sounds like you're still going, which is great. But what was your thesis? And what is your thesis around stablecoins, and why do they represent sort of the future of payments?
So when we think about stablecoins today, I think a lot of folks think about sort of being able to move value faster across the world, especially in markets that may not have the necessary financial infrastructure to be able to cultivate more trade and commerce between different geographies for both individuals and businesses. But to me, stablecoin infrastructure is powerful because it drives towards what we call a tokenized or on-chain economy. Today, it's money movement, it's payments that's on-chain, but we imagine a world in which FX, bonds, equities, real estate, all value in the financial systems will go on chain. We would be able to drive liquidity across 8 billion people all over the world in all of the different markets and be able to create new financial services that ultimately cannot be created because of the infrastructure today. And that's where I think stablecoin infrastructure is driving to. And that's ultimately where the value will accrue, where it goes beyond the payment methods or the financial systems that we understand today, but it's the new fabric or medium for which new financial services can be created. And that's what we're very, very excited about. And that's where the programmable nature, the cross-border global nature of this infrastructure is so powerful. And ultimately, folks talk about cross-border payments or cross-border financial services. I imagine a world where it's payments without borders or financial services without borders, where there's a lot more of a sort of a integrated, interconnected financial system where value can move seamlessly, where, geographic borders, it does not equate to borders when it comes to the financial movement of value and money all over the world. And I think it's only that reality when I think there's a lot more capital efficiencies for businesses and individuals.
I'm curious, you've sort of focused in, it's fair to say your core product is credit cards, right? Which is obviously a very established product. So why start there?
So I would argue that this tokenized economy world may seem fairly sort of intangible today, especially for folks that are sitting in more developed markets. But in places like Brazil, as an example, the number of people that own crypto exceeds the number of people that own equities, right? So the level of proliferation in emerging markets as it relates to this sort of idea or ideology behind the tokenized economy is definitely not made equal across different geographies. And it's very much correlated to the stability of the existing financial systems, but also how far out folks think about what the sort of the proliferation or development of the financial systems that they're used to today. But I think this is ultimately also why we started with cards and payments, to your point. Right? Most of our revenue and growth today is driven by our stablecoin card infrastructure. We're powering a lot of the modern neobanks, the centralized exchanges with their captive audience. But I think it's a bit reductive to say that we're a cards company only, right? I think we think about cards as a very powerful network that actually emulates a lot of the core parameters of blockchain, where it's available 24/7. It's relevant for multiple geographies all over the world, all at the same time. You can use your Visa card here in Hong Kong as you would in Europe, as an example. So from that perspective, it actually shares a lot of characteristics as blockchain. So we want to be able to marry the two together to be able to bring the networks to the modern world as well. And that's why we are working very closely with the schemes to be able to develop what that ultimately looks like. At the same time, I will say that the customers and platforms that we're powering are not card companies. They're very much building the next wave of, what modern banking looks like. And that's why we're very excited about not just the card piece, but also providing infrastructure across payments, across in the future, things like yielding and lending and borrowing and all of the infrastructure needed to be able to develop the next wave of financial services that are a lot more global in nature, a lot more programmable in nature, and they leverage a lot more, I would say, global standards when it comes to the infrastructure that we're able to provide. And then that's why ultimately, we're sitting in different geographies all over the world. But the idea is we want to synthesize the capabilities and the best capabilities of, the infrastructure in the US, in Europe, in Asia, and then be able to distribute and bring it to the people that need it the most, which today is mostly the folks in the emerging markets. So, and I think that's the power of stablecoin infrastructure, where it's a catalyst for change, right? It's a catalyst to be able to upgrade the financial systems that we've taken for granted today, but it really sort of has a lot of gaps when it comes to the global south.
Right. I want to talk about how you're approaching cards. And firstly, are you a Visa principal member? Can you issue your own cards?
We are. Yeah, we're a principal member across a multitude of different geographies, actually. For Visa.
What are some of the geographies where you can do that?
So we started obviously here in Hong Kong, and sort of we leverage a lot of the global infrastructure for both Hong Kong and Singapore. And if you think about Hong Kong, Singapore, some of the financial hubs that we're also in, such as Ireland. These are regions where they're not serving purely domestic businesses. You're really, incorporating, having a presence in these geographies because you want to have a regional approach. So we've done the same in places like Mexico to be able to serve Latin America, Ireland to be able to serve Europe, as an example, to be able to connect all of these different financial hubs together to be able to export financial services and financial infrastructure all over the world powered by stablecoins. And that's native to stablecoins. So most specifically, we have our principal membership here in Hong Kong. We also have a principal membership in Mexico and Latam.
Right. Interesting. So you mentioned like you work with neobanks and such, but can you give us some names? So who are the companies that you're working with? I imagine is it mostly global brands? Are you working with some just purely domestic fintechs as well?
So, and that's where it's quite exciting, right? So even if these folks start off as domestic players, they quickly have ambitions beyond sort of the region that they started off with. This is true for folks that we're powering and working with, like in Yellow Card or Mandioca in Africa, or Braza Bank in Brazil. These are all folks that have very much global ambitions. So as they think about the next wave of their growth, we can hopefully provide the infrastructure, the capabilities to be able to grow with them. And that's how we've been able to scale, where it's very much growing alongside our core partners, some of the modern neobanks that you're describing.
Right. Gotcha. Can we just get in the weeds a little bit and talk about how the flow of funds work? You said like where you've got a stablecoin based credit card and one of your partners has issued a card to a consumer, let's say in Mexico, that they spend money on a REAP Visa card. What happens? How does the flow of funds work?
Yeah, so the card itself is actually a fiat credit card, right? It's a US dollar credit card, but it's collateralized with stables. So imagine a world in which you're giving us $100 in stable coins, and we issue you a $100 credit card based off of that particular balance. So it's a secured credit card, but it's securitized with stable coins today. Behind the scenes, there might be sort of leveraging different digital assets or virtual assets to be able to collateralize as well. But from our perspective, we mostly work with stablecoins only. And the idea is that we get access to the stables, provide the limit, and then work very closely with different sort of stablecoin issuers, market makers to be able to then settle to Visa in fiat through the stablecoins that's provided by our partners and the platforms that they're working with.
So then does that mean the consumer in Mexico has to deposit stablecoins with their financial institution that's working with REAP, or or is it the financial institution itself that collateralizes? Who's providing the collateral?
It depends, right? And so it depends on the platform that we're working with and the value that they're delivering to their clients. So some of it could be provided by the platform if they're providing more of a true credit model. Others, they would be able to take the deposit directly from the end consumer. And our role here is to not dictate what is the right or wrong model. It is to provide the picks and shovels necessary for all models to be able to sort of execute based on their own user research, their own demand and capabilities that they want to be able to provide to their customers. And then I think that's where stablecoin use cases are very dynamic all over the world. And we don't want to be too prescriptive around exactly how things are supposed to work, but very much provide the infrastructure and the picks and shovels to be able to cultivate different use cases. And I'm often very surprised by the level of creativity and innovation across some of these platforms, which obviously is a reflection of the sort of the different dynamics, cultures, and nuances of all of the different markets that are obviously very at different stages of maturity when it comes to financial systems and payment methods.
Right. I'm curious about whether you have plans to come to the US. I mean, we have stablecoin legislation now, and how do you view the US market?
We're excited by it. So I actually will be moving to the US in January for a little while. So hopefully that is a sort of a microcosm of how we think about the US and I guess our excitement about it. I think the US is interesting for a couple of different reasons. One, it starts with our clients, and I think U.S. capabilities is something that all of them have been asking for. And now that regulations have opened up, I think it's as an infrastructure player, it's up to us to do a lot of the legwork and grunt work to activate those capabilities and bring it to the global product suite and global platform that we've built across the financial hubs in other regions. The second thing I'll say is that cards and payments are obviously very competitive, and it's competitive for a reason because it's been so ubiquitous across the US markets for so long. But what I think is interesting for the US that's actually relevant for all of our users internationally is what I described when it comes to the tokenized economy, right? So if you think about tokenized stocks, tokenized real world assets, these are all concepts that are originating from the US that I think will sort of be the beachhead necessary to be able to drive the developments of the tokenized economy across the world. So I think because of the, I guess, progress on the regulation side and the institutional adoption that are starting from the US, I do think some of these longer term tokenized economy type of concepts will be originated from the US. So that's why I think for us, we want to get ahead of that and be excited about some of the, developments there and make sure that we're plugged into that as much as possible. And the last thing I'll say is like financial institutions, even globally, a lot of them are headquartered out of the US, have a lot of connectivity to the US. So because of that, we're actively building out some of the key strategic partners and developing our relationships there to be able to continue bringing more capabilities for global audiences. So I think the way we think about the US is that it's a very strategic market, not just for users, but for business intelligence, for innovation, but most importantly, to be able to unlock some of the longer term tokenized economy concepts that we're obviously very excited about, but we need the right partners to work with us to be able to activate that. And I think a lot of those partners will originate from the US, and that's why I'm moving there.
Right. Gotcha. Okay. Before we go any further, I saw some news recently, which I thought was really interesting. You obtained an MPI license in Singapore, a major payment institution license there. Tell us about that. Why did you do that, and what's the significance of it?
Yeah, look, I mean, apart from, being a bit of a biased place where, Singapore was my first landing spot in Asia. So it's always been has a special place in my heart. Singapore is, quickly becoming the cornerstone market for REAP, especially as we scale our digital financial infrastructure solutions across Asia and globally. It's one of the most progressive hubs for digital finance. 25% of fintech firms operate in payments here. So there's a lot of, I would say, connectivity for that already. So Singapore will continue to be one of our key strategic base especially for our Southeast Asia operations and cross-border payments. And similar to Hong Kong, it has a lot of international capabilities that are not necessarily for Singapore domestic businesses per se, but really for financial institutions that have global ambitions. So it really much fits into that thesis. So we're excited about the MPI and what it can bring to us. And I think over the next couple of years, we're actually going to be adding to that license to be able to expand the different product suites that we will be able to build. So Singapore is a key cornerstone market for us.
Right, gotcha. So let's talk about that expanded product suite. We've really only touched on cards primarily. What is the product suite that you're working on right now?
So I would say cards is what we started off with. Embedded payments is actually one of our fastest growing product suite where we're essentially helping different trade financing, cross-border payments, invoice factoring platforms to be able to pay out into a multitude of different currencies and countries all over the world, leveraging stablecoins to be able to do it faster and more efficiently. And then the third product suite that we have is a financial operations, bill payments, expense management platform that allows stablecoins to be able to help businesses pay for payroll, software expenses, and things of this nature, and really connect their stablecoin treasury to real world business expenses. And what's exciting and what allows us to be able to operate three pretty unique business lines is the fact that, one, as our customers grow, all three products become more or less relevant for them because they're not just cards companies or payments companies. They are building the next banking for a global audience. So that's why the product suite that we have gives us additional touch points with our clients as they continue to grow. At the same time, the way we think about these cards and payments products is that we are the program manager for them, meaning that we want to be able to provide all of the ancillary services needed to make those programs successful as well. So everything from global logistics APIs, KYC compliance APIs. And we want to create the standard for our partners like Visa, the banking partners that we're working with, and regulators to create that standard for compliance globally so that we can create more trust for them as well. And that way, as our partners continue to grow, we are doing the legwork when it comes to licensing, compliance standards, and fraud management sort of utility to be able to make their program successful. So that's the second phase where we have a lot of value-added services that we're delivering. And the third phase is continuing to add other pieces around leveraging the same platform services around FX and licensing to be able to drive additional value. Things like lending and borrowing infrastructure, yielding infrastructure, loyalty infrastructure. These are all things that we have on the roadmap to be able to drive additional value to them as they think about the next phase of their growth.
Interesting. So can you give us some sense of the scale you guys are at today? I mean, you maybe how big is the team? Well, what's the processing volume? What can you share there?
Yeah, so we have a little bit over 250 people globally in 28 different countries. So it's a pretty decentralized and global company. And, we invested in those capabilities quite early on. And I think that's indicative of the customers that we have and the regions that we ultimately think this technology is, best suited to add value to. In terms of, volume, we're doing north of $6 billion a year. And we're growing. We've grown our revenues 8x in the last 10 months or so, and have been profitable for more than a year now. So it's been a sort of an exciting journey, but I think we're very much in the early innings of how we think about that growth. And there's still a lot of development and work to be done, especially as we think about the future of the tokenized economy, where it's really beyond money movement, beyond cards, and beyond payments. And, if we think about it from that objective perspective, there's still a lot of work to be done.
Oh, for sure. Yes. And there will be continued. That work will never end because there will continue to be new things that will come, and we could go down that rabbit hole for another half an hour. But I want to talk about you're selling into traditional financial institutions. You talked about the bank in Brazil, also obviously the fintech, crypto native companies as well. How are you basically serving multiple different segments at once?
Yeah, so I think the definition of crypto native has evolved even since we've been active in this space, right? If you think about what the definition of crypto native was, maybe even a year ago, it was very much sort of these traders and folks that are into the speculation game associated with crypto, as everything from the Genius Act to Circle IPO to Stripe buying Bridge. And the institution adoption of stablecoins, now it's becoming more of an infrastructure play. So in my mind, longer term, there shouldn't be a delineation between crypto native and non-crypto native, just like how we don't really say whether you're an internet native or you're not internet native anymore. It's really sort of transcended that to be more of a upgraded ways of being able to get access to the sort of the financial systems of the modern age. So when we think about it from that perspective, the stack that we have, the way that we actually bring, whether you're a crypto native company or you're more of a traditional institution, to the stablecoin stack that we have, it's actually quite similar. Right? We have certain KYC requirements. We have a certain ability to be able to synchronize both the on-chain data with their off-chain spend to be able to create a more sort of seamless understanding of who they are and what they're doing, both in the on-chain world as well as the off-chain world. So from that perspective, there may be a bit more education necessary for some of these traditional providers, but ultimately the infrastructure of being able to issue them a wallet, issue them a custody, sort of being able to custody at their assets, being able to assess the risks and compliance related requirements for those assets, they're all very similar. I will say that a lot of that education and bringing them into the fray is something that it's not just what Reap is doing. It's across a lot of the different ecosystem players that we're working with. And that's what drives the trust for them to be able to adopt this particular technology. But from our perspective, our goal is so that whether you're a small startup looking to build a global neobank, or you're a larger institution that wants to make your treasury and back office payments more seamless, we believe that stablecoin infrastructure is the next new modern financial infrastructure that's applicable to everyone. So it's not about whether you're crypto native or non-crypto native in our mind.
Okay, so I want to close with, I'm curious about how you would describe like the next generation of finance. Beyond just the tokenization piece, I feel like that's still yet to be determined how that plays out. But what I'm curious about is the money movement piece. What's your vision for the next generation of money movement, and what role will Reap play in that?
Yeah. So I think we want to be the nucleus for how all new financial services can be created. We want to be the picks and shovels to enable and drive that forward. And I think it may be helpful to sort of go back to the Stripe world, where Stripe was very much a payment processing company with really elegant APIs. But what they were able to do is essentially create payments sort of capabilities that drove the proliferation of platform businesses, of subscription businesses like Netflix and Spotify, to be able to charge cards in a very dynamic way, right? And that was the starting point for a lot of SaaS businesses to be created, for different dynamic family plans to be created. And they created the infrastructure to be able to charge cards, to be able to do that at scale. When we think about what are the financial services necessary for the next wave of businesses, especially in emerging markets, they need a different set of infrastructure that's a lot more dynamic to be created to be able to drive value for them. So as an example, we obviously do payroll stream payments today, but for some of these emerging markets, they want to get access to faster access to working capital, to salaries. So we want to do things like payroll streaming, where we're paying them every millisecond instead of every month or every 2 weeks, as an example. We also want to build things like on-chain escrow, where we have a multi-sig wallet on-chain to be able to facilitate B2B payments in a more trusted way, but be able to have access to the global, south, and to be able to connect developed markets and developing markets, especially ones that are facilitating a lot of trade for physical goods. So these are all concepts that I think we want to be able to provide infrastructure for. But then ultimately, I think it's a new way of thinking about what money movement in a more modern, internet native, programmable stack looks like. And that's ultimately why we're excited about the longer term implications and applications of stablecoin infrastructure.
Okay, well, we'll have to leave it there, Daren. Really, really interesting chatting with you today. And best of luck with your move to the US, and best of luck to Reap in general. Thanks for coming on the show today.
No, appreciate it, Peter. And hopefully we get to discuss more exciting things in the near future as well.
I have to tell you, I absolutely love the idea of payroll streaming, or really any type of payment streaming. Why do we have to receive our salary once or twice a month? Or for that matter, pay our subscriptions once a month? Why don't we pay and earn money in real time as we go? The main reason is that the financial infrastructure of today couldn't handle it. But what Reap is building opens up an entire new world of possibilities, and payment streaming is just one of them. When the next generation of financial rails are in place, we will suddenly find that the 20th century way of operating no longer makes sense. Anyway, that's it for today's show. If you enjoy these episodes, please go ahead and subscribe, tell a friend, or leave a review. And thanks so much for listening.